Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the SP 500. I'm going to have a look at the ASX 200, as well as gold, copper and uranium in a separate video. I'll leave a link for that in the description section below. I've also got a really interesting graph for you, one you probably haven't seen before, so make sure you stick around for that. As always, this is general commentary, doesn't take your personal situation into account. With all of that said, let's get into our first chart. So we're going to begin with the S&P 500, and it's been another week of constructive consolidation. Not really a great deal of price movement, but I think that the overall tone to this market remains corrective and, as I say, constructive. And this is typical of markets which have been through a large upward phase or a strong trending period. It's just normal for them to travel sideways and take time. And what has been interesting though, during this period, like the negativity has again increased. Every time we see the market pull back or go sideways, it's been common for some fear to come into the market, particularly whilst we're going through this probably more uncertain than usual period in the economy. So I saw a really interesting graph on Twitter, came up on my Twitter feed during the week, and it's this one here. It's the put and call ratio for on the S&P 500, and so the graph above is the S&P 500, and below is this put and call ratio. So every time the ratio gets above 1, it's telling us that there are more puts being bought than calls, and you often see put buying when there's negativity in the market for whatever reason, whether people are betting on a lower market, whether they're hedging their portfolios. You see put buying increase relative to calls. And the author of this graph has marked previous occasions where the put call volume has been high and transferred it above to the S&P 500. And you can see that more often than not, a high put call ratio coincides with a market which is getting close to making some sort of a meaningful low. Not all the time by any means, but overall there tends to be this correlation between high put call ratio and market lows. Just looking whether the S&P 500 currently is, we're in September, we're in that month which causes nervousness, and we're seeing the put call ratio increase. Whether it's a coincidence, whether there's something else on investors' minds, I don't know. But look, it's just one of those interesting things to keep in mind. September is seasonally the weakest month of the year. Gets people worried. They call it the crash month. And yes, there have been some big crashes in Septembers. But more often than not, September passes without any great flurry of activity whatsoever. So odds are that this September will be like most other Septembers in that it'll be relatively uneventful. But look, you never know. I think maybe the extra interest in buying puts at the moment is due to that reputation September has, but let's just see how it plays out. A few weeks ago, as the market started to turn lower, you might remember I started talking about, look, what are some of the pathways that this market could take? And one of the ideas I suggested was maybe we see that classic zigzag develop, where the market sells off, then it rallies, then it has one more decline. That would still be my base case. That's been my base case for the last, maybe it's the last month now. That's been what I've been looking for. But you've always got to be open to the market doing something different to what you think it should do. I think that longer consolidation makes sense given the extent of the upward move we've had. It would give a more solid base to then support potentially a further rally. But of course, the market doesn't care what I think would be my preferred case. It's going to do what it's going to do. So we've got to be aware of other possibilities, and one of those is that the market does rally off these moving averages. What's interesting to look at is just to quickly jump over to the NASDAQ, and when you look at the NASDAQ, I want to go back to this period here in February, and we had a rally in the NASDAQ, came back to the 50 and 100-day moving averages, and then started to rally again. Similar sort of setup now in that we've got a market which has come back to those moving averages and starting to rally. So when I say being aware of other possibilities and not getting locked into a single line of thinking, this is one of them. Maybe we do get a situation where the market doesn't give that that zag lower again to give that second wave decline, but instead it rallies off the moving averages to a new high. It's not the case which I think has the most highest likelihood of success, but it is. Look, it is one of those cases. I think that the longer consolidation would look. The longer consolidation is my preferred view, but look, just entertaining the possibility of the market popping higher. One of the things I'll look at when I consider that, I'll look at an RSI, a relative strength index. So just popping that on the chart. If the market were to pop to a new high, I think about like what would the RSI look like? I don't think the RSI would make it back above 70, and I don't think it would make it back above these highs, at least unless the market started trending for some period of time. And then that would potentially create a divergence where you have a NASDAQ at a new high, SP 500 has a similar structure. So markets at a new high, but not confirming with the RSI, so giving us divergence, and then that opens a possibility again. So if the market were to rally, it could still fall back. So I think that longer consolidation really does remain to be a base case scenario, depending on whether the market comes back now or pops higher, then comes back. My play for managing this is and it's been the case the whole way along, it's really been staying with the trend. Because as you can see, it's just so hard to figure out like what's going on in these consolidations. Will they extend, or will they turn into something else? So I think the best way to play these often is to just stay with the underlying trend. The underlying trend has been up. Not trying to be too clever by getting in and out. For most people, the big money is made by sitting. It's not by actively trying to sell the high and buy the low and get too smart. It's just sitting with an overall trend. We use these consolidations to try and maybe add to a position or work out, how do we manage our risk rather than trying to pinpoint every turn either way. And now look, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching. YouTube shows more people, and that helps me a lot. And hit that subscribe button if you haven't already done so. Now, I just want to quickly wrap up with a look at the Russell 2000, so the small caps. And it's been a fairly quiet, uneventful week. But what has been encouraging is that support at around 1,800 is holding. We do see the Russell, it's below the moving averages at the moment, but it is above the support. So that's a key thing. Another thing to note on this is we do have a series of higher lows, which has been tracing out over the last few months. Every time the market pulls back, there does seem to be interest in buying the dip. So that's encouraging. What we do need to see, though, we need to see a break above. Firstly, we've got this trend line resistance, which bounds the upper boundary of this trading range the market's been in over the last, close to 18 months now. But really, we do need to see a break above this overhead resistance at around 2,000. That's what we need to sort of see that type of larger rally gain traction. And because why that's so important is to get a healthy overall market, we need the small to mid caps participating. They tend to be the best markets where you have that broad participation. So I think this has the potential of being a large basing formation in the NASDAQ, but we do need that upward break to give confirmation of that. So I think, look, interesting things happening this week. Let's keep an eye on this price action. Thank you for joining me. It's been great talking to you again. I look forward to coming back and talking to you next week. Till then, bye for now.